we're back with another week trading the tape, and here we're going to go over the weekly catalysts, news headlines, another big week of earnings, and a few names of interest on the equities category. But first, as we always do, we're going to start with gold. Let's quickly go over the red folder events for this week. We don't have much going on. Monday starts with ISM manufacturing reports. It should give a direction, but it starts at 5 p.m. So the whole day is probably going to chop in a small range and gap up or down as usual and wait for that report to come out after the market closes. Aside from that, we got a pretty dead week. Jobs reports, and Friday we have a couple more red folders: unemployment, non-farm employment change, and average hourly earnings, which usually doesn't affect the market too much. With that, we also have headlines: Trump claiming that the Strait of Hormuz will be opened, but Iran quickly dismissing that, saying that that's false narrative, all bullshit, as Trump has been lying to us quite a bit and can't be trusted too much with what he's saying, probably getting his buddies to pile in an oil short or a call depending where they want the liquidity to lie. But with that, let's get started with a quick run over gold. Gold is still in a squeeze it's been in since about the beginning of July. 1 month squeeze, tried to break the highs, hit the resistance above, broke back down, and it's been in this squeeze for the past month. Last Friday's session ended up a little bit more bearish, actually making the lower low. Never a good sign, but again, we can't take that at face value. Can't expect it really to continue, although there is a good chance if it does, it will do so parabolically. Quick supports below, since we have quite the box. Next level will be the 4,000 area, and below that 3,961, and still haven't hit the actual major support here from the lows before the breakout at 3890 area. If it breaks below that, we can expect a bit of a run back down to 3,500, since you can see that's where analysts expect the price to go. I have my doubts. It seems a little bit too easy, but the head and shoulders pattern was made, so that's their inclination. Too many people might be piling in that. We can also check the open interest to ensure that that's not the case, but next we'll go on the 4-hour chart to see if that story remains the same. 4-hour chart shows a bit of a bigger range though. Also, the day showed that it had a tweezer bottoms, kind of a reversal pattern. If you're playing candlesticks, no guarantee, that's always a probability, but we do have it here showing that the potential reversal is in, since the candle did not close below. From there, anything above the 355 area, we can go back to 386 and potentially back to 4120. Anything above that will happen quite quickly, probably not going to allow too many people to enter. Right back up to the 4180 area. 4171 is, or 4165, is the major resistance above. Don't expect a full run through that, guys. If it does hit that area, we could see a major wick back down pretty quickly, trapping buyers, or a larger candle that's going to run right through that and end up above the 4200 area. But again, depending on how many people pile in, we can expect that to reverse fairly quickly. They don't like the order books thick, and they don't want many people to pay out. Their goal is to make the price action untradeable and ensure that either no one enters or everyone gets punished that does enter. The hourly chart is showing a bit of a different story. Bands are currently red. Hit the resistance of the first band, rejected it by the end of the day. End of the day candle ended up making a lower low, pretty bearish at first view. So anything below 4,040 could see us coming back down to 4,025 to 4,022 area. Anything below that, we're going to be checking 3,000. But again, 4,000. Again, I don't expect it to stay around this area or break below. I'll show you the open interest map and why I believe that to be so. Open interest shows here a lot of puts heavily leaning below 4,100. For that alone, I'm expecting them to hold the price above 4,100 on Monday session, potentially even above 41.25, but I don't think they'll close there. Anything above 450 is very unlikely, as a lot of these calls will end up in the money. So I'm expecting a squeeze in between 41 and 41.50 throughout the day. Ensure that nobody gets paid out in the money below 4,100 or above 41.25, 41.50 area. That's how I'm playing these heat maps these days. There's been very little change to the open interest. As you can see, people pulling their bids on Friday, adding a few calls at 4,075 and removing their puts from anywhere above that, which also shows that the inclination is leaning to the upside. But again, they're just going to squeeze it between those prices since there's no major catalyst, and their main goal is to ensure that these contracts don't end up in the money or paying out in any way, shape, or form. How I like to trade is go right to the 15-minute chart. So what I see on the 15-minute chart was a major breakdown from Thursday's high. We got a run up, and of course, what did they do with that? Used all these to sell right back and come back to the bottom, continue the squeeze. They don't want to make the lows because everybody seems to be leaning towards this 3,500 area in their head and shoulders pattern. They don't want to make the highs because there's no liquidity lying above there. Not many people are just going to be quick to enter. So what they're doing now is gathering some accumulation, trying to build the order book as thick as possible to cause the most damage, and in the meantime damaging the shorter term contracts to ensure that they win and we lose, as they always do. End of day Friday ended up pretty bloody. Big candle at the last few minutes of the day. Never really paints a picture. Kind of just a fuck you move, as they always tend to do, since it was squeezing here. Bands green. If anyone's not familiar with the colored bands, they kind of show how the trend is doing. Green bands give a support for the upside. Red bands give resistance to the downside. Easily tradable, makes it a lot easier for me to understand where they're gonna start reversing from. As you see, the bands will cross and change colors. For instance, these bands usually don't just reverse in one go. Usually when they go from a little bit of a run red, they won't go right to green and start the uptrend. They'll go in a bit of a red, green, red pattern to choose the next direction. But it's always a good sign, showing that the move is exhausted and ready to reverse. And with that, we can move to the equities section. We can start with the VIX. VIX, if anyone's not familiar, tells the story of volatility index. When the VIX is down, that means that equities will tend to trend upwards, and VIX is up, equities will tend to be trending down. So as you see, the VIX dumped off pretty hard here on Friday, just like I mentioned, but it's also at some pretty low areas since the indices have been making highs all year. So as you can see, this area of resistance or support below, has been pretty strong for some time. We're as far back as 2023, these have been the lows. So you can't expect the market to trend too much higher in these conditions. But again, extended to the downside, large wick on this daily candle showing that there could be a potential continuation downward, but I don't expect them to open the day with that downward and the spike up on indices. So my initial reaction for Monday is I expect a small gap to go downward before upwards, depending on the circumstances. We can start with SPY. Show you the story here. We have the daily, and they're very bullish with a pin bar candle upwards, closing above the green band. That's always a bullish sign. From my perspective, they could potentially gap up in the morning. If they do gap up, the first open in my analysis shows 750.5 to the 754 area. That's my initial open idea. Anything below that, we could see it open around 742 to 738 area. With those numbers, it makes it a little more difficult to grab the trade at the initial open. Continuations rarely happen on those patterns, so I tend to stay away from them altogether. But again, as you see, indices did make some lower pricing on the previous week, quickly reversing, starting a trend back upwards to the top of the box. The squeeze continues, so again, I don't expect there to be a major move upwards as well due to the lack of catalysts, although manufacturing reports tomorrow could change that a little bit, but it won't happen until the end of the day. So initial open, like I mentioned, guys, anything above 748, we could see the gap open around 753 area. Anything below, we can see it open at 741 or 738 area. I don't see the gap being much larger than that due to the lack of catalysts. Remember, do not trade that direction based on the gap. That is never really the way it goes. Sometimes you can wait a few candles, grab the mean reversion, watch the day reverse and close back towards the open, and vice versa. We can check the 1 hour chart just to show you the same idea. Here's the resistances and the supports. The support starts at 743, next support below that 739.62. So if you do see the gap, the hourly paints the best picture. I could see it opening around the 739 area. 743 seems like a bit of a light gap, but there's still a potential that it doesn't really make that move large. Next, we'll go to QQQ. Bit of a different story. QQQ made the lower low, broke the structure, and is looking very bearish compared to SPY. SPY is in a bit more of a squeeze. QQQ broke that squeeze, showing a sign of weakness, although going lower wouldn't have made much sense. I marked this area 664 as a potential support in my previous videos if you want to check those out. Anything below that, we could probably see it go to 655 to 650 area, and below that is going to be quite the dump to 635. I think something major would have to happen in order for that to take place. But again, I expect tomorrow potential gap fill above, although the run just took place, so my main expectation will be to gap down. First support 684, below that 680 area. So the gap down again will make it tricky for the entry. Do not follow that trend initially. Wait for a few candles, potentially take the mean reversion. Anything above, we could see the gap up open at 695, and above that will fill this gap very quickly to 704 area. That would be quite an easy trade to fill that gap, but again, I wouldn't wait. I would just hold off, try to grab the mean reversion, since we know that throughout the day the market's most likely going to reverse halfway through. Major names, more earnings, jam-packed week for earnings. We got Monday, Berkshire Hathaway, Palantir. Tuesday, Spotify, Marathon Petroleum, AMD, A-Labs. Wednesday, we got Uber, we got SoundHound, we got Joby and Shop. Thursday, we have Team, Roku, Peloton, Mara, GigaCloud Tech, Airbnb, Rigetti, RCAT, D-Dog, and Friday, Take-Two Interactive. Major earnings, a lot going on. All those are going to bring some more capital into the markets, or maybe take them out depending on how they want to see the situation. But with that, I do have a few names of interest worth swing trading. We'll start that with the first, Tesla. Why I like Tesla. We'll check the daily chart here on Tesla. You can see that the earnings did cause a bit of a sell-off. The sell-off took place actually on the earnings day with a major gap down, still rode down. I would like to take this trade to the upside due to the support that it's hit here, making it an easy stop loss. First first support here, I would say, is around the 290 area. Decent stop loss would be around 289, 288 area. As you see, this wick didn't hold. Anything below that is probably getting a little bit dangerous, but it makes it an easy RR to the upside. First target would be 340 area, sorry. And the next we have a major gap filled to the 367 area, making that a good RR for anybody who likes to trade Tesla. I don't see it really breaking down below that easily, and we'll know tomorrow. As if it gaps up, it'll make the trade a lot more difficult. Try not to enter that because the stop loss will be moved away quite a bit, kind of ruining the trade. Very good chance it'll do that, but a better circumstance would be if it gaps down or comes back down toward the 295 area, making it a much easier entry with the tight stop loss just below and a massive RR riding it above. Next, we have Teams. Teams looks good to me, not because of the earnings, but because it finally reversed on this massive breakdown, showing a nice bottom in store. If you go back into the charts, it's hitting a major support level from where it broke out, giving it a bit of a safe trade here. I probably would take the trade anywhere from 95, maybe around where it's at. I'm not expecting it to open up below. If it does, that would actually make this a lot easier of a trade. So if it does gap up, the trade has gone to shit. First target will be 114. Next target above that will be the 137 to 141 area. I wouldn't ride it anywhere above that. Getting a little dangerous. It'll already produce quite a nice RR, so I wouldn't want to get greedy and hold through that. A little bit risky. Next, we got ROKU. ROKU is interesting to me because it made this massive run up and has earnings coming, and I don't think that a good earnings will quite give it too much more of a run, but I could be wrong. The reason I like the trade is because there's an easy stop loss just above its head from a full run, quite a bit extended above. So if we can see it open up in this area of 145 tomorrow without gapping down, makes it an easy entry with a stop just at 148. First target 134, next target below that 126, and below that 120 area. Again, I wouldn't hold it much below that. You can probably see a major wick go up, especially if these earnings are positive. Positive earnings don't necessarily mean price up. As I mentioned in previous videos, they're going to use these circumstances for liquidity to fuck anybody over. More people pile in, the thicker the order books are, the less likely that trade is to take place. That's just the reality of it. I know you guys hear these gurus who are preaching old school price action and certain strategies that no longer work. I've been trading for a few years now, and a lot of these strategies that used to work have gone out the window. And now the major way to really get them is to understand where the liquidity lies. Don't be piling into the farm with everybody, because that's how you get caught. Contrarian is also easy, but if too many people are doing the same move, again, you will be the bait. You will be getting caught. But again, if you're in one of the only people doing the opposite move, it makes it quite easy to get caught as well. So you have to find a fine line of where the liquidity is, where they're going to want to trap that liquidity, where the stop losses will be sitting, and where they're going to hit so they don't make parabolic moves after they do get hit. That being the case, I like to trade the tape usually in the mean reversion patterns. I don't like to play any trends in today's market, and it's been serving me quite well. Next, we have PDD Holdings. Similar situation here. Hit a bottom, hit a major support level. There is a lower support at 61. I don't see it hitting that low. If it does, it would be a nice double bottom, but easy stop loss once again. Bands turned back to green after quite a major run down. Stop loss would be around the 82 area. A good entry would be anywhere from 86 to the current 88 level. First target 93 area. Next target above that 97.98 exactly. And above that, if it goes really smoothly, we can make it back to about 102 area, making it again a good RR, easy stop loss, and a nice trade to take a risk on. My kind of trade personally. And next on the list, we have Microsoft. Microsoft I like as well because it made a massive gap up, and we know how these gaps love to fill. And it also ran into a major resistance above its head. So unless it gaps up again above 488 area tomorrow, anything from 466 to the 483 area could be a good short trade with the stop loss just above at the 487 mark. If I was to enter here around 467, I would have to set the stop loss at 483, but the first target below is 435, and below that 405, making it an amazing RR. Sounds like a big risk, but the RR trumps that. Just keep your risk managed, and you should just be killing it on that trade. I don't see how it's going to continue running, but again, taking a short into strength is a little bit risky, so it's good to watch this trade in the morning. Any gap up, probably a good time, but hold a few candles in. Don't get caught right away. Don't jump into it. If it does run up without you, which is unlikely, you might want to stay away from the trade. But again, it's running into so many major resistances above. Any short trade above this area will probably suit you well. Just play it correctly and don't get caught, guys. Again, don't jump in right at the beginning unless it holds this area and doesn't skyrocket in the morning. This would be the good short area. Similar thing if it doesn't open above 488. Any short between this area is going to be a good entry. Anything above gets a little bit more tricky, but you can see the resistances. Try to enter near those resistances, making the stop loss tight at those resistances, making it a good RR. The targets will change a little bit, but for now we have 433, 435 to 405 area. Next we have Lulu. Lulu's been on my watch list for a few weeks. I still haven't entered it, but it is consolidating quite nicely down here. It's showing a bottom from huge rundown. All the earnings always showing up pretty well. We have earnings coming up next week, or actually the end of the month for this one. Always a good sign, but for the time being, this trade might take quite a bit longer. I would suggest taking it about 2 to 3 months out. It might take at least a month or two to play out, but amazing RR nonetheless. We have a stop loss just below 108. First target 135, next one above 143, and if it goes smoothly, we can fill this gap to 162. Lululemon's probably one of the better ones for a longer swing trade on this watch list, so keep an eye on that one. Next we have Rigetti. Rigetti's a little bit of a trickier one, considering these AI stocks have been pretty much gassed out, running up, selling off pretty hard. But again, it's running into a major support level, making it an easy RR. Stop loss just below this box at 1275. Any entry below 15 would be a good entry. Anything above starts making this trade a little bit tricky. First target would be 19, above that 20, and above that we got 22 area. I wouldn't hold it too much above, since your RR will be quite good at that point. Most of these trades have very high RR, so getting the contract at the right time, I would probably take this one again for at least a month, maybe even 2 months out, just to be safe. But it's a good trade in my eyes. SoundHound is next on the list. Similar idea, a little more tricky, since SoundHound has the earnings this week on Wednesday, and its major support is quite a little bit lower than the 613 level at 450. You want to take a lower risk on this trade, but I like the way it looks. It's running into these support levels pretty strongly. I don't see it breaking too much below that, and it's showing a bit of a gas out here, as it already tried to make the high and failed it. If it can hold this area a little bit longer, anything above that, we can see the next target of 719. Above that, we could see 833, and above that 920. And if we're lucky, we could get some parabolic candles and just run it up, but I wouldn't hold past this on any low volume or weakness. Take your profit and run. The point is not to always be right. The point is to make money. A lot of people tend to lose sight of that and have a lot more reward just being right, which kind of defeats the purpose of why we're sitting in front of these screens. And it gives these market makers the upper hand, allowing them to use you as liquidity, as they have been doing quite often over the past year. So that's all I have for the watch list. I don't see anything else really showing much of a good trade. I'm not a box breakout trader. I'm not playing any real trends. So in my perspective, the best trades for these would be the mean reversions, the ones sitting at the bottom, the ones that have already tested the bands and that have already tested 250 MAs. So with that, I got the watch list. We have the news for the week. We have the major earnings piling up, the open interest, and the areas of interest for gold. Again, I suggest that gold should be holding in the 4100 to 4150 area towards tomorrow's session. Scalp it to the upside. If you see anything below 440, we can quickly retest the 4020 area. Anything below that, 4000. Don't get caught, guys. Don't follow the trends. Don't wait for too much confirmation, because that's not how these markets have been working. Any confirmation is a trap. They're not giving you a warning of the move. So you have to really predict where this liquidity is going to be. Keep your stop losses tight and trade correctly. If you have any questions, please leave your comments below. Good comments, bad comments, they're all welcome. Any other assets or even commodities you want me to go over, I can do that in a short or another trading session here. But yeah, with that, have a good trading week. Don't get caught. Don't be liquidity. Don't get emotional, and make some money, guys. Enjoy the week. Have a good one.